Well, since we only have 2 hours anyway, I would love to respect our time and get started this morning. So thank you. Thank you, everyone who is joining us today. Please mute yourselves. We are going to record this, so we don't need a lot of background confusing noise. So please be doing that. We'd love to see your faces. So if you don't mind, keep your cameras on if possible, just so this feels a little more like a social interaction instead of just little black boxes. But we know internet's unstable and life goes on, and you may need to turn your video off, and we totally understand. But it's lovely to see your faces. We're really glad you're here this morning. As I said, we are recording this. It will be up on our website. We also will be sending you a very short survey afterwards. We've been sending one for each of these series of webinars so that we can hopefully adjust on the fly to any kind of critiques you give us, and we would appreciate that. So please give us your honest opinion on things, and we will certainly try to accommodate and change as we go along. This is the third of a series of 5 workshops. We have 2 more, obviously. You can do the math. If you're here today, you're probably inclined toward that. So we are glad to have you for our finance workshop. Tamia, if you want to go ahead and start with the slides, I think we can get started with that. We're going to have questions at the end for sure, but we also ask that you use the chat box to use the chat box to type in your questions, and we will be monitoring that, and we'll be able to give John your questions as we go along. So appreciate you providing those in that chat box. Okay, so we are really glad you're here. The Community Foundation, most of you know us well, a few of you don't. So we started in 1998, and here's our mission. And today we feel like we are right on point fulfilling that mission by creating a more effective and creative nonprofit community. So thank you for all you do. We are happy to support you in everything you do. And we honestly do feel like that is a huge part of our mission. A broader spectrum of what we do is on this next slide. You can see some of these things. These are our programs and initiatives. You can read more about these on our website. But again, the support of our nonprofits in our region is absolutely foundational to why we're here. So why are we here today? So we know 2020 has been, you know, quite the rock and roll show. We are all hard hit by it. We have all learned a lot already. So this workshop is in direct response to the things, the challenges that you said you were facing, the workshop topics you wanted to hear more about. And this is in addition to, you know, giving you grant money. This is an additional effort of ours to bring resources to bear for you to help us all through this right now. And hopefully, you know, we've learned a lot. We won't be hit flat-footed again. We'll be ready and flexible for anything else that comes our way that, that ends up happening. We know we're a long way toward recovery. We're headed in the right direction, but there are still challenges to come. So, as I said, we did hear your feedback. This whole workshop was crafted around your responses to your grant applications and in one-on-one conversations with you. So we want to help you adapt what you had as your strategies, and now with this new reality, how do we, you know, kind of course correct and move forward in the best way. So that's what this workshop is all about. We also wanted to remind you that we hope to for anyone attending all 5 sessions, anyone anyone from their staff doing so, that by the end of this, you will have a template and you can fill it out for a 2021 action plan using everything you've learned from all 5 of these sessions. So again, stick with us for that, and we will have that coming soon. So with that, I wanted to introduce today's speaker. I am so pleased that we have John with us today. You can see his depth of experience there, more than 40 years in this field. He is a very approachable and empathetic and experienced leader, and you know, I can't say enough about how much I've enjoyed getting to know him, even though most of it's been through email the last few weeks, but he is a very caring person. And even though he's this numbers nerd and data geek, he's also a lover of poetry. And I just love that about him. I just think it makes him real to me. And so live from the East Coast, here is John Gillespie, who will guide us through all matters financial. Thanks, John.
John, can you unmute yourself?
Very good. Sorry about that. Welcome, everyone. Yeah, it's a real pleasure to do this. And you know, Phyllis is right. I am a huge poetry lover. I host a weekly poetry hour at the Stockbridge Library, where I'm the board chair, and it is my time every Wednesday at 1 o'clock to, I call it, plug myself into the poetry wall and recharge. So yeah, it's a combination of, yeah, most of the time I'm doing math, and the other time I'm looking at verse. So keeps life in balance. So okay, I'm sharing. I guess the question is, I'm trying to figure out how I move the slides forward. Or maybe I just
You can do it with your mouse. Yes.
oh yeah, just yeah. Let me just say this. You will receive a copy of the PowerPoint presentation. And so there's going to be a lot of content. You don't have to worry about taking copious notes about everything. You'll be receiving the details after the program. So we're going to cover 6 areas today: financial statement review, business profitability analysis, strategic budgeting, financial dashboards, cash flow management, and operating reserves. Let's dive into the financial statement review. So the review of monthly financial statements is, and we have 12 EDs that signed up for this, you know, along with some board members. The monthly review is probably one of the most important things for financial sustainability, to really look at the numbers and understand them. My second point is, depending on the size of your organization, many of you may be using bookkeepers. The bookkeepers need oversight. You still need to review their work, and we're going to get into some of the other details. I review things with each month side by side, so I can identify trends, review uneven patterns. I'm also looking for the completeness of accounting. You know, what isn't there that should be there? So here's a sample. And once again, I do this with every client, whether it's paying or pro bono. You know, I'm really looking in each one of the months and seeing what stands out for me. So just in this case, you know, if I look down at the compensation, you know, it's 60,000 in October, it's 52.5 in November, and 58 in December. You know, I would be asking, you know, the executive director, well, who left in November, and it looks like you added someone in December. Once again, when the numbers start to vary, that's when you have to ask some questions. The concerns that I may have with an income statement is there are significant revenue items that have no activity. And I'll just give you an example from a former client. You know, they had an earned income business, and then one month they had, you know, just absolutely no dollars. And I think they had posted some of the revenue to the wrong account. So, you know, it was a pickup of, there should be money there should be dollars there. There may be expenses you see that aren't allocated to the proper program or activity. You may see basic expense items that fluctuate greatly month to month. I mean, if your rent is $5,000 a month, I'll just add a client where rent was 10,000 one month and zero the next month. So they paid the rent on the 1st and on the 31st, and then the next month they didn't have to pay rent. And it's not that we're not paying the bills. It just alerts me to there's some process issues. We may be paying bills early. There may be some things. So once again, it's alerting me to look at some items. And then some expense items might be missing. For the balance sheet, the review items, a cash balance may seem too low. If my cash has been, averaging $50,000 a month per se, and now it's $5,000 a month, I have to ask some questions. Now, the accounts receivable balance, and this could be grants receivable, there could be some donor commitments. If it looks too high or it stays too high, you have to ask some questions. Or if there's no balance in all when there should be. There are times when a payroll tax liability may be too high. It doesn't mean you paid it. It just means that there are numbers there that should have been reduced after the cash payment. I've never seen a nonprofit or an organization that doesn't have an AP balance. And then, if you're looking month to month and your retained earnings or net assets are negative, that would make you ask a question. So before we move on, I'll just share with a current client. I was hired to review their financial statements, their board reports, and they have a new bookkeeper. And they also have an outside accountant. So what we found out, and this was just on Monday, is that the new bookkeeper didn't know what all the general ledger accounts were comprised of, and at times was using what this person was told historically of how to apply accounting for certain transactions. So I became concerned that the bookkeeper knew about 2/3 of what was going on. Once again, this is a person I know pretty well. So we have the bookkeeper that knows 2/3 of it. We have the outside accountant that knows about 40% of it. The executive director probably knows 90% of it. To me, too many missing pieces. And part of my job here is to develop a checklist so the financial review on a monthly basis or quarterly basis is complete. So does anyone have any questions about the review process?
There's nothing in the chat box so far, John.
Okay. Let's move on. So the business profitability analysis, and what I mean by this, the business unit can be a specific program activity. It could be an operating department. It could be an event like an annual conference. It's really any activity where you can track revenue and expenses that determine gross profit or net income. And the reason that this is important, it's really telling you if something is cash flow positive or not. Now, I'll give you an example with another client. They have a small publications business, and the revenue is $5,000 and the expenses are $60,000. Now, part of that is staff allocation. But I think the question we're asking is, how can we improve the publications revenue, or do we have too much employee time charged to publications? That's the value of looking at something on kind of a revenue expense and net basis. So this is from the Nonprofit Finance Fund publication. And in certain parts of the nonprofit sector, if you had a lot of programs, you'd be talking about or looking at program profitability. And the reason it's important is that the financial dimension or the financial factors are one way for you to weigh in on, okay, this is what's happening on the number side. This is the mission impact. Once again, it's giving you kind of I call it a balanced scorecard about what you're doing. That's why this is important. And once again, there's a reference there. You can find that. The highlights, what does it really mean? You want to create financial sustainability and programmatic sustainability. I think it's important to realize what's sustainable today may not be tomorrow. So you may have a program or activity that generated some very healthy dollars previously. COVID, the pandemic may have turned that upside down. What worked before, and for a lot of people that could have been in-person annual conferences, may be greatly reduced. So it may not be the same as it was in prior years. It lets you identify and segregate business lines. There are some cost allocation things that you can do to really understand these businesses. You can determine the business line impact, alignment, scale, community, it fills a need. There are other things you can do. And this is a great publication to look at, the matrix max of impact and profitability. And so we just finished the 2021 budget for a $6 million, almost $7 million nonprofit. And, there were different groupings of business, but I went to the class report in QuickBooks, if a lot of you using QuickBooks, because I wanted to see what the profitability was of the subcomponents of each one of those business units. And there was some good information to me. That's where I looked at the publications piece. That's where I looked at they're doing some work in research, and they have to make a big investment of staff to make the research business. So because in the budget presentation, revenue was up top, expenses are below, but it doesn't give you this, hey, here's the revenue, here's expenses, what's this business doing? So that's why I consider this to be important, and something I do all the time, and I stress with nonprofits. So, anybody have any questions about business profitability?
Yeah, John, we had 2 questions in the chat. Can you see them, or do you want us to read them to you?
I guess I could. No, it's easier for me to read them.
Okay, so Brian asked, assuming no income, how many months of reserve funds should you have available?
If you had no income?
Mm-hmm.
Well, why don't we hold that topic until we get to operating reserves, if that's okay, if we talk about that?
Okay. And then we have another question from Carol. So it says how to take out just one program in profitability. Is there a report in QuickBooks to request that? And Carol, you may want to give a little bit more detail on that, since that's a very specific question to, I think, your venture.
Yeah, like, are you talking about if we have multiple programs and you want to know, like, if our camps are profitable, for example? I have to say at the moment, what I end up doing is making my own report with just the staff time and the camp time, expenses, etc. How do we set those up with our bookkeeper to do so I don't have to manually do that?
Well, there's a couple things I would do first. One is, make sure that your classes are set up properly in QuickBooks. So each one of those program activities you want to review has a separate class. And with that separate class, obviously the revenue is captured. Your direct costs, those direct costs could be outside printing, consultants, travel. Those direct costs that are allocated or charged for the program should be in that particular class. At another point, if you're not, for staff time, if you're not doing time tracking, you would, look at your staff list and work with your management team to say, well, 40% of this group belongs to this program, 20% belongs to another. You'd have to make some judgment calls on how to allocate compensation or employee time. And you might do the same with rent or other costs that aren't variable. The other thing I should mention this also, you're going to see it at the end of I think it's the last slide, is I will be providing for those who request it, another hour or two to basically dive into some of these topics. There are a lot of items here, and if you need further time to dive into that, I'm willing to do that. Suzanne, is that it? I guess those are 2 questions. Okay.
Yep, we've got those taken care of. We'll keep chiming in as questions come in into the chat for you.
Okay, great.
John, I think there was one request to see if you could turn your volume up a little bit. You're a little faint for some people.
Hold on a second. It's hard for me to do because this is filling the whole screen. How about if I just talk louder and get closer to the screen? Does that help?
That helps. Yeah, that's great.
Yes.
Okay.
Thank you, John.
Yep. So strategic budgeting. We're going to cover these elements. What's the goal of projections, methodology, the revenue forecast, staffing forecast. You'll see why this all fits together and will help your budget puzzle work. So why are projections important? I'm sure all of you have been involved with projections. You're in organizations that do budgets or projections. One of the important reasons is you want to predict cash flow. You want to know, how the income and expenses are going to flow out. You want to have a financial roadmap for your organization. Number 3, give confidence to funders, donors, sponsors about your budget. You also can set goals for proposals, new programs, marketing campaigns. Your budget can show, when you're going to make some investments. There may be some staff hiring, capital investment, other fixed expenses. And I think the good thing about a budget is the last point, it determines your need for investment or debt. And when I mean investment could be foundation grants, it could be earned income, it could be donors. Debt, once again, these are categories. Debt technically is your PPP loan until it's forgiven, or your bank line of credit. So the elements of a successful financial model, I use accrual accounting. So basically what that, and I'm sure many of you are familiar with this, is the revenue or expenses are incurred in the accounting period where that event happens, but they're paid to receive another period. And the reason it's important is that if you have an accrual financial model, you can figure out, I think pretty quickly, what the cash effectiveness is. If it's just the cash accounting you're using, if somehow you pay expenses earlier or revenue collections or revenue received slows down, it throws your whole forecast out of whack. 3 statements: income statement, balance sheet, cash flow. There are some people that do multi-year budgets. I suggest if you are going to do a 3-year budget, you do the first year by month and the next 2 years by quarter. The other thing I like to see, once again, I do this all the time, is that you should have supporting schedules that are part of your budget process. We're going to talk about them in a slide or two. Hold on one second, please. So it could be development and other income pipeline. There should be a staffing schedule. If you have a significant amount of outside consultants, you might want to have those on a schedule. There may be certain operating expenses. it may be a detailed marketing budget that you want to have a schedule for. You may want to have mini schedules, which I do with models, to calculate AR, AP, things like that. And then there ought to be some dashboards to summarize the critical financial and operating information. So this slide is courtesy of Suzanne and Social Impact Architects. And I really like it because it's a visual depiction of how you start to break down, your budget. On the left side, you've got sales revenue and the sales volume of prices. But the thing is, that sales volume could also be, I have 50 donors in the average donor, which would be price. The average donor is giving us $1,000. So I have 50 donors times $1,000 equals $50,000. On the cost side, there's two sections. One is the variable costs, or in another depiction, direct cost. What are those direct costs related to that revenue activity? And once again, you've got a unit item and volume, unit cost, in volume, and then you've got a schedule for fixed costs. So I like to, I do all the time. It's not I like to. I call it the bottom-up approach. And what I mean by that is I like to see the calculation lines instead of embedding them into cells. I inherit at times some models that I need to revise. And, what I'm seeing is basically line 3 that just says $60,000. So I have no idea what makes up the 60. I may have to look into the formula. Maybe there's a link to another spreadsheet. And the reason to do this I call them calculation lines. It's very easy for you to change line 1 or 2 and to calculate the new value. That's what's better than putting it, to me in a formula. It does that scenario planning. You can alter one or all the variables. I suggest you link the worksheets together. So when I'm doing a model, the assumptions page, which has income statement and balance sheet items, the income statement, the balance sheet, and the cash flow and supporting schedules are all linked together. So if I change one item on the income statement, it's going to flow through to the cash flow and the balance sheet. I don't have to worry about if those statements are now going to be balanced or correct. The last point, I'm just so crazy about this. Your worksheet should be print ready and have titles. I can't tell you how many times that I get things, and I'm more of a paper junkie because I like to write notes on things. I've got to make sure that I can print it and I've got the proper headings. It's fitting the page. It really, it's very subtle, but it really provides a bonus for those people reading your budget or printing off your budget, that it's ready to print if they need to do that and take a look at it. All nonprofits, and I'm gonna put a lot of things under development. You're all looking to raise money through a variety. It could be earned revenue, it could be contributed revenue, it could be, state or federal grants. When you're putting together this forecast, you should have assumptions for who you're going to pitch, who you're going to reach out to, and why. And you need to understand funder and marketplace trends. And I'll tell you what I mean by that. And I'm sure this is not new news to you. So when Black Lives Matter became a very big issue after George Floyd, there was a tremendous amount of foundation activity of grants that were being donated to new organizations, organizations that were addressing those issues. So in a way, the foundation, at least for me reading the Chronicle of Philanthropy and other areas, the funder marketplace tilted. Now, in some cases, the foundations gave more money. So other organizations that were involved in their own activities may not have seen any reductions, but it did change the dynamic of what funders were doing. I would review your past activity. Always a good indicator. If you have a foundation, just had a call with a pro bono firm organization I'm working with, and they have a 3-year grant. The foundation changed leadership, so she said she's reaching out to them. She said, "Well, what should I do?" And her finance committee chair was on the call. I said, "I would get your next 3-year budget ready, based on your past activity, and just be ready and have a forecast ready." Number 4, understand what other revenue sources you should pursue and why. The gross revenue, there are times when, it could be donors, it could be a grant. Gee, it could be, we could get 100,000 or we could get 50,000. You may want to take an average of those two. What I like to use is what I call net revenue, which is, gee, it's a $100,000 grant. I think I have a 75% chance of winning this. So my net revenue would be $75,000. And you'll see that in a slide that we're going to show. Then there's a little cash forecast tip there. So the other part of the revenue forecast is really to understand, Phyllis, the funder decision-making process. And I think it's sometimes it's very clear, other times you have to dig in. But I think a part of it is what I call, what is the sales cycle? How long does it take an organization to start the application process and make a decision? And I'm calling it from the start of the proposal process to the receipt of the signed contract. What are the steps involved? Who needs to make the decision on the funder side? And then how soon after the verbal approval will you get into a contract? Just a tip, make sure your contract terms are explicit, either based on dates or milestone delivery. I would say almost every foundation grant I looked at has very specific things like that. But if it doesn't, you should just make sure that it's very clear for you. So we a bunch of organizations work. I call it a funding pipeline. You're going to see one on the next page. It's listed by prospect. It also could be listed as I gave an example before. You may have development efforts and you have 50 donors and they gave 1,000 each. You may want to just, you may want to group it into a group rather than individual line item. Apply a probability of that happening, and the result is that expected revenue. And the expected revenue is what goes into your monthly income statement, forecast, or budget. I've seen people, once again, with that example of 100,000, they put 100,000 into the budget. And just think if you did that 4 or 5 times, but there was only a 60% option of that happening, it would really leave you with a gap. So I like to be conservative and net that revenue forecast down. And you'd also segregate new opportunities from your existing funders. So this, I should say too, that the 3 Excel spreadsheets are available in another file that I will send to Phyllis, that if you wanted to see how to put these together for yourself. So this grant worksheet is from an actual client. Obviously the names, the ABC Foundation and the Do Good Foundation. But what I like about this is they have committed grants, pending grants, and targeted grants. And for the committed grants, you can see up top, the receipts are already scheduled by quarter. So you know how those funds are coming in. In the targeted grants, you've got a total amount of the grants, 440,000. Over to the right, there's a probability of those grants happening. And then you've obviously got, a total net number for the grants. Staff, and once again, I think I would think that the majority of you are doing this, but we like to see a staff schedule by title, by functional department. We want to see the annual pay, and the data hire is important because there are times when there are increases that go through the year based on hire date, and I want to see that. I also want to calculate headcount. I calculate LinkedIn cost of living, bonuses. You can see down below that equals the annual compensation. Once again, kind of general estimates. Payroll taxes are about 10%, obviously depending where you what state you're in. Health and other benefits could be 5 to 15%. Those are just rough numbers that I use when I'm doing some calculations. So annual compensation plus taxes plus the benefits equals your total compensation. I would just make sure you're aware of any compensation that's to be deferred or that's contingent upon meeting milestones. So, one of our clients has a deferred retirement option. Another one has a membership business as part of their business, and the people that are selling memberships get a base salary plus commission. So once again, we need to know, about other compensation arrangements that aren't in the traditional compensation mode. One of the key staffing questions for employees is the build versus buy. There are organizations that only want to have employees, so they're building their workforce. There are other organizations that want to get to market quickly. They need to start a program. They want to get up and running. They're buying consulting time. That's just a key decision for you, especially if your nonprofit business is expanding. It's just a consideration. I would just tell you that in the Boston area, I'm in Western Massachusetts, the accounting personnel pool is pretty tight. So if you wanted to go out and hire people, it may take you 2 or 3 months when you could use an outsourced solution and start, whether it be accounting, marketing, development, you could be starting, program activity the next week. That's the consideration. Identify the skill sets required. What's the timing to acquire them? How much will it cost? How much can you afford? Who's available in the marketplace or labor pool? And then, you've got, 3 options I see. The full-time employees. I would not discount the permanent part-time. There are a bunch of customers that have a 2 or 3 day a week person doing a very significant job, and they're not full-time, they're less than 30 hours a week, but it's a key part of their organization. And then obviously the 1099 are outside consultants. Rent, once again, I can probably benchmark the dollar per square foot on different cities. I often see how many square foot per person. Now, with the virtual or hybrid office, maybe the rent calculation isn't that important, but it's just something that if I need to do it, I can do it. And then the last is, budgeted items that may be based upon head count. They may vary up and down about staffing levels. office supplies, data, telephone, some insurance types, providing your staff with technology. So here are the lessons learned. And so I worked, let's see, I did 12 pro bono assignments in 2020, and I probably worked with 5 or 6 clients or customers, and probably talked to 10 other prospects. So, good sampling of 30 people. And in addition to the annual budgeting cycle, I strongly suggest you have an accurate and realistic next 6 months budget. Last year is very, very critical because there was so much uncertainty. The farther away you get from creating your budget, the less relevant it is. And the most important, to me, for financial sustainability is what's going to happen right in front of us in the next 6 months. I suggest and do it where we work with multiple budgets. One is optimistic, another might be just achievable, and the final one is pessimistic. The value of that, once again, you would probably do your achievable budget, then you would have some scenarios that would be optimistic or pessimistic. It lets you access and execute key elements in any one of those budgets. So think of the three, the 3 areas. And this applies to those people who are doing conference or events. Is, one budget is the in-person conference budget. The next one is the hybrid budget, which is, some people going in person, some going virtual, and then the other budget is virtual. So each one of those has a different amount of attendees, registration costs, things like that. And then once again, measuring business unit activity or event profitability, very, very important to find out what's working and what isn't. So Suzanne, do we have any questions about the budgeting process?
I'll jump in. I'm not seeing anything.
I'm not seeing anything either. I did, one just popped up. Because we can't anticipate any new funding that may become available for COVID grants, is there a way to read the programs to determine?
Oh, you're reverberating, Susan.
Not
Here.
good.
Let me try it. It says, because we can't anticipate any new funding that may become available for COVID, the programs on the horizon to determine if more funding might be available to you.
So I want to translate that question. So there are concerns about COVID funding used for existing programs, or is this really talking about new programs?
I am not sure. Whoever asked the question, go ahead and just speak up if you want to clarify that for us.
The one thing I'll say about revenue forecast, and once again, I just went through this with someone yesterday, is that the finance committee chair said, well, if there's less than a 75% probability of success, we probably shouldn't include it. So I think it's very challenging to have a revenue forecast where a lot of items have a 50% chance of success. So I think trying to predict when future, could be COVID grants. I mean, obviously COVID related, could be restaurant related, food related, rent abatement. I think it's very challenging to predict when any of those things will happen. In the PPP-1 loan, the forgiveness application, I think, has changed 4 or 5 times. So yes, you already had the money, but to figure out how to, every time you wanted to do a forgiveness application, they said, no, you don't do this, you do that. And those things can happen with future funding sources. something could happen. So, maybe someone will give us that clarification more about the question. So we'll move on. We'll talk about financial dashboards. So dashboards frame your financial picture. And I've started to use this with every one of my clients. I'll give you an example. We just had a budget meeting, and if I showed them the revenue items, they would be 150 line items in the budget, specific line items about one workshop, this workshop, certain consulting project. So we condensed each summary revenue area into one line. And what this does, it lets people, I call, put a frame around it. Hey, what's my revenue? What's my expenses? What's my bottom line? If you give people too much detail, I can do it because I do it for a living. It's very difficult for a board member, a funder, to dive into 150, 200, 250 lines of data. There's all sorts of different columns. You want to frame the conversation. What's the story you're telling about the financial picture of the organization? That's why a dashboard helps. It also highlights what's important, and there's all sorts of different dashboards. And I'm going to give Phyllis, there's a great book that Board Source put together on dashboards, and I'm going to give her the information on that so she can share with you. To me, it's just, it's the only way to start. So once again, I'm going to send an Excel spreadsheet, and you'll be able to see these in a little easier numbers. So the spreadsheet, the dashboard we've been working with on boards that I'm on and with clients is, we're showing the income statement or statement of activities, what happened in the given month and what happened in year to date. That's the top part. Then in the financial position or balance sheet, we're showing, assets, liabilities. This organization, obviously the names have been, the ABC Foundation, the DEF Foundation, and their events have been greatly reduced. So a lot of their money is on grant income. So that's why there's a listing of restricted funds. Those restricted funds are basically time restricted that can be used. And then the last piece, we always like to highlight where we are with cash. So in this case, they have $210,000 in the bank. They have $40,000 in debt. In this case, the debt was the PPP loan. So they have net cash reserves of $170,000. So if you divide, the $170,000 by $440,000 of the annual expenses, you get 4.2 months of cash. And there are some organizations that are very cash challenged, so that bottom part is as important as the income statement part. Do you have enough cash to manage your business? So are there any questions about dashboards? I know it's kind of brief. So what an organization may see is there's a dashboard or a summary. I'll give you an example. This organization was basically giving the finance committee like this detailed QuickBooks income statement and balance sheet. And it was very difficult to get a picture of the organization. And they would just keep going up and down the spreadsheet, looking at stuff, making comments, how much were office supplies, how much was something else. The conversation couldn't be focused. So when we did the dashboard, it's very easy to say, wow, compensation is $5,000 over budget. What happened? It lets lets the conversation start in a good place. So Suzanne or Phyllis, do we have any questions?
Yeah, there's, first of all, back to the prior question, we got a little clarification on that. I think the question was, okay, seems like with all of these federal funds popping up, like the CARES Act funding or whatever, should they identify a potential sum, a potential amount from those kind of sources in the budget, knowing that there is talk about potential federal programs? And someone responded with that, saying that, well, where did that one go? That you should run a worst case scenario budget and, assuming no PPP, so again, going back to your comment of, sort of that expected and then a best case and worst case from that. So I don't know if that totally answers your question, Sharon, but I thought that was a good reply just from Brian to everyone else there.
Yeah,
and then Carol had, go ahead, John, sorry.
Yeah, the PPP loan, when PPP loan 2 came out and you had to show a, quarter on quarter, 25% drop in income or revenue. And, they basically had the forms, they showed you how to do the calculations, and the funding pool is available. There's a great degree about certainty. I think there's been all talks in Massachusetts about different restaurant funds, restaurant support funds, restaurant COVID funds. And I think, some of them happen, some of them don't. I think the question I would ask is, what's your level of certainty? And with something that's not, it's something that is just being talked about and is not, I guess, reaching fruition. It's not becoming a reality. I think you should be looking to other revenue sources to bridge the gap on that.
Okay. We did have a couple of dashboard questions. One was wanting to know whether the dashboard you were showing was handmade and not a report from QuickBooks or another tool. And then she also couldn't see the full report on your screen and wondered if that was adjustable.
Yeah. There, as I said, I'm going to send Phyllis the Excel file.
Okay.
It has whatever the 3 forms are that are in the PowerPoint. It'll have those 3 files that you can navigate.
Okay.
It's much easier to see. It's not a report from QuickBooks.
Okay.
It's basically, I mean, you could do it and cut and paste. In a way, it's a way for you to, and once again, there aren't that many data points to enter. And it's a way for you to enter the data and almost absorb it more by entering the data and looking at some of the variances. So it's not a standard QuickBooks report. There is an add-on product called QVinci for QuickBooks that does some higher level reports. There are a bunch of add-on, and I don't know, but I'm sure there's some kind of dashboard report that they create, but I'm just creating this in Excel, customizing it with the organization, and then that usually the executive director populates it.
Okay. Assuming everyone gets this template, I hope we've answered the dashboard questions. If not, please give a more specific one in the chat box and we'll be sure to go back to it. But other than that, I think we're ready to move on.
Yep. And I have it around here somewhere. No, there's a great resource about dashboards from BoardSource, and I'll get Phyllis the information, and it comes with a CD, and there are a lot of different options you could use. So, and Suzanne also has some dashboards that she uses with her customers. So, cash flow management, the big challenge of 2020 and I'm thinking 2021. So why is it so critical? Cash is the engine of your business. And it's tough to move your business forward if there's not enough gas in the tank. And, just like a fire can die without oxygen, we never think a company can die. And maybe, your nonprofit may die, but, you may have to, as other organizations have, suspend operations for a while. You may have to do other things to really, really conserve cash. Once again, I like the 6-month time horizon. You can go longer. I think a good 6-month cash flow that relates to that 6-month budget is the tool you need. And the reason the 6-month, I'll give you an example. So, if a catastrophe happened, let's say like COVID, I'm sure people did it. It may take you a month or two to pivot. It may take another month or so for you to work with your, constituents, your board, outside accountants, and then it may take, another month or so, to do some financial scenarios. So that's why this 6-month time horizon, if you think through it, it basically covers you. So if something happened in month one is you'd have a plan, but you'd have a few months to cycle through it and develop another budget. Realistic assumptions in multiple scenarios. These are things I've talked about before, factoring in current business and economic conditions. A lot of it is based on historical financial data, a detailed revenue forecast, and then we take the accrual budget and we factor in, when cash is coming in, AR, when it's going out for compensation and other payments, AP, and that's how we work the forecast. Hold on. So there are two cash flow methods. There's the direct and the indirect. The indirect is more about the changes in working capital, and I find it not to be as informative as the direct method. What's great about the direct method is the top line is beginning cash. You're seeing another section where cash inflow. You're seeing cash outflow, and then you can strike a balance at that time. And then items that aren't at times directly related to operations, could be the PPP loan, a bank credit line, investment results, capital expenses, or on a financing section. And then at the end, you've got the ending cash. Once again, what's great about this is the cash inflow tells you how much money you should be expecting every month. If you use the indirect method, you're not going to have as much specifics. So that's why I like this. And once again, this method is a lot easier to use to basically translate your accrual income statement budget to cash flow. And now I'm going to talk just about some suggestions on how to improve your cash position. You should have a credit policy. And once again, you all have different kind of businesses. You may be extending credit to people. If you do, you should understand the credit worthiness. Like if you're dealing with, state governments, sometimes those state governments, yeah, they're credit worthy, but you have very delayed payments. You really need to understand not just the credit worthiness, but you may want to, like item number 3, you may want to get hopefully a deposit or retainer when you sign a new contract. If you're invoicing, do it earlier and more frequently. When I had my own business, I started out invoicing monthly. Then we changed it to where we invoiced on the 15th of the month and month end. And it coincided with the payment, the compensation cycle. So it's very easy to manage. Every invoice should have a due date. You should follow up the week before to confirm the payment. And there are times when you want to offer incentives for customers to pay early. Once again, this may not apply to everyone, but if you are in that earned income business, or these are some tips. Now on the payable side, comparison shopping for prices. You may want to negotiate a better price I mean, there's been so much uncertainty. Someone may want to still supply you, but give you a better deal. You should look at competitive bids for larger purchases. You might want to negotiate payment terms with suppliers and pay them in 60 days instead of 30. There are times when it may be better to lease, a computer for $200 a month than buy one for $2,500. That's the leasing versus buying. We see people doing it. At times they use revolving credit cards when it's appropriate for purchases. And then you need to prioritize your AP open items. And I'm not saying only pay key suppliers, but I think if you are in a cash crunch, you should understand who you're paying first and why. Unfortunately, so many organizations have gone through this on the operating side. Years ago, just this slide probably wasn't relevant, but the use of employee furloughs. There are some organization work with went to a 4-day week versus a 5-day. Reduction, reviewing unnecessary expenses. For those of you that are geographically located in the Lake Tahoe area, there may be a way for you to share expenses. You ought to evaluate some barter opportunities, and evaluate outsourcing departments or functions. Those are just some of the suggestions on operating. And finally, I don't suggest you compartmentalize the cash flow concerns by yourself. You need a second opinion. You also need the second point, involving your board, accountant, and key employees. They can help you navigate how to get out of a situation. There are times when customers, donors, suppliers may need to be involved. Maybe you're going to get some donor money early. I think the key here is you really need to communicate early and often. Don't wait until you're on the edge of a cliff to communicate that you really have this incredible problem that you're not able to solve. You've got to get the people that are involved in your business on the inside and the outside involved. So that it is for cash flow, and I could probably talk about cash flow for another hour or so because there are so many ramifications. There are times when if you had a state grant, now this is pre-COVID, you could go to some lending institutions and get a loan against the grant proceeds. There are all sorts, but there are different options for cash or generating credit. It would all depend on your credit worthiness and what you're going to use the money for. So, at times it's not just donors, foundations. It may be that you need to start an earned income business, or you need to go to your bank. I mean, most small organizations, well, there's one was the treasurer for 7 years. They have a line of credit with a local bank just to establish and have a relationship. They never use the 100,000, but they have the credit line. So any questions in the chat about cash flow?
I don't see anything new. I think we've handled it all. Okay.
The one thing I did not add that should be added to cash flow, it's at the end of the month, you should assemble what were the actual numbers that happened in the month versus your forecast. Once again, that's going to show you how far you're on or off. It's going to maybe show you where some gaps in revenue coming in, things like that. So don't just create a cash flow forecast and forget it. When month end, that's the time to compare what actually happened versus your budget. So operating reserves, people ask about this, and I've got some other suggestions that are not in the slides. So the common reserve goal is 3 to 6 months of operating expenses. So if we went back to that dashboard, that example, they had 4.2 months of cash. You could say that's your reserve. That's how much cash you have in the bank. The people view the operating reserves in a variety of different ways. They view it as either cash you have in the bank, or maybe you don't have enough cash in the bank, but you have an endowment, or you have an investment account. We did a proposal for one organization that their reserves were 20 times the size of their budget. It was it was affiliated with the National Institutes of Health, and they had $50 million in the bank, and their budget was $3 million, something like that. And but the low end, your reserve, something you should always look at is you always want to make sure you can cover at least one full payroll. So whatever that number is, you're going to look at your own business, set up your own reserve goals. So there are a bunch of different ways to do this. There's some people, once again, great article, and I found this and I could send it to you. Some people use this percentage basis formula. I just have to have 50% of my expenses in a reserve, or 25% of my expenses, and it's just taking an annual number and taking a percentage. I think it's easier for the number of months formula. So I'll give you an example. If the expense is 600,000, 1/12 is 50,000, and divide, we have 75,000, so we have 1.5 months. I think the number of months is very easy for board members to understand, rather than saying we've got a percentage. It's we've got 6 months of cash, 9 months of cash. Once again, you can set a target formula. So the basic reserve, cash plus accounts receivable plus prepaid expenses, less AP, accrued expenses, and accrued wages. If you were just looking at your current balance sheet, there are a lot of adjustments. And I'll give you an example. And so Phyllis, I was an interim CFO of a foundation that had $150 million in assets for 6 months in late 18 and early 19. And that December of 2018, we had that gigantic market drop. It dropped 10% on a Friday. Then in the next week, it dropped 5%. So we were having a board meeting, I think it was late January. So we re-looked at the operating reserve policy, and we changed 1 or 2 of the calculations. But because of the volatility of the market, where a lot of their investments were in, and those investments provided a lot of the income for the foundation, is that there were certain levels of operating reserve that if it got reduced, there was a related action to reduce expenses. So if the operating reserve number went from 3 million to 2.8 million, we couldn't hire someone that was on the prospective salary schedule. If it was on another, so what it did for the board, it gave them the confidence that as situations changed and if they deteriorated, we had a plan that we could execute. Now it took us 4 or 5 weeks to get the language, review with the finance committee chair, review with the finance committee, make sure the numbers are right, do some different scenarios. But it really became a real comfort factor for the board that we had downside protection, that we weren't going to be surprised when something happened and we were able to execute. So, and Phyllis, you might have asked me this or somebody else. So, how do you increase operating reserves? And, one way obviously is to increase your operating income. Obviously, that's the money we're making from your current nonprofit activity. You may want to look at new avenues for donor contributions or development. Maybe there's a matching contribution program that some of those funds could go into a more permanent reserve. Bequests, sometimes you get bequests that may come in. You may want to start a planned giving program. Phyllis, you may comment. I'm not seeing, well, maybe you see it. I don't see as much of the foundation world activity, but I'm not seeing foundations funding operating reserves. They're funding program areas, they're funding strategic initiatives. I think it's up to the organization basically to kind of fund their own reserve. What do you think about that?
Yeah, we've tried to really move more toward trust-based philanthropy and give unrestricted funding, but there is an expectation that that funding would be used within the next, within that grant period. So yeah, I guess I agree with you. We're not typically looking to fund operating reserves. It's more core operating support, if you will. And hopefully, that given that stream of funding, it allows the individual organization to possibly put some strategy around how to create their own operating reserves. We did have a couple of questions about how reserves are shown on a balance sheet and if they're specifically labeled as such. And we had a comment back about that. Go ahead.
I'm probably more of a traditionalist, so the balance sheet items are the balance sheet items. I think the operating reserve is almost an extract from the balance sheet as a separate schedule. I think your operating reserve, as I said, could be investments, could be in endowments, it could be in a restricted fund. I think you ought to be, for me anyway, I think you ought to be using normal balance sheet accounts that would hold a reserve or a reserve amount. I think just to call something operating reserve on the balance sheet is just, to me, it's a little misleading. That's all.
Okay.
What was the answer from the person?
It could be in the form of your banking account balance. It could be in investments. We do T-bills, which are highly liquid. All of your assets should appear on your balance sheet. So
yeah.
Pretty much in agreement with what you just said.
Yeah.
We have another comment that said, we have set our budget to have positive income at year end to fund our reserve. Is that wrong?
No, I think the tip item, create an operating reserve policy, there are organizations that say, our plan was to have a positive $50,000 change in net assets. The next 50,000, if we exceed that, will go to fund the operating reserve. I wouldn't, once again, the budget should be realistic. If I guess the budget should support, cash being generated to fund the reserve. I don't know if I would just add something that says 50,000, because part of it is just remember the reserve. The reserve is, cash, endowment, investments. So really it's a cash effect. We just finished the budget and the finance committee chair said, well, why aren't we showing operating reserve as contribution as an expense item? Because I said, I'm taking $50,000 and I'm going to put it in this investment account. So it's really a transfer of cash within the organization. So it doesn't have an income statement effect. that's generated from the income statement, that goes into cash, and the cash can fund the different investment accounts, things like that.
Okay.
So, this is one of my favorite quotes of, I've been doing this since 1998 on the interim side. I think this woman Safra is now the president. She's still the president of Oracle. She might be the chairman now. If it's not in the numbers, I don't care how strategic it is, it doesn't play out. And why that's important is there have been times when people have tried to convince me that what the numbers show is not the true story of the organization. And my response is, let's go back and put together the numbers that do show the story of the true story of the organization. But if it's not in the numbers, it's very, just think of it. It's not in the numbers. You're going to go to someone like Phyllis. You're going to go to a bank. You're going to go to someone else and say to them, you know what? My numbers really don't work out, but I've got this fantastic idea if you fund it. Now, once again, I'm not mean to be playful about it, but part of it is if your numbers can't stand your own due diligence, and it's not really fully achievable, I think it's very hard for you to go out and convince someone. And Phyllis, I think I don't know if it's the last 3 to 5 years, but the scrutiny of foundations, and I'm going to talk about this next, what funders and people look for, is the scrutiny of foundations about looking at financial statements, comparing financial statements, comparing budgets. I think the level of sophistication is really increased. And if it's not in the numbers, I think it's very hard to sell you a story. I mean,
I'm just going to jump in and agree with that. When I'm reviewing grant applications, one of the first things I do is open up the financial statements on one screen and I have the narrative on the other. And I start looking for things in the narrative that makes me ask a financial question, and I'll go look for an answer in the financial statements that they've attached. And if there's a huge disconnect, it's like you say, John, it's like the numbers aren't telling the story that was in the grant application, so again, I would just, encourage people to make sure that their financials do incorporate all the things that they're, projecting for the next year, what they're asking for, especially when you're talking about new programs or expansion on programs. If your budget doesn't reflect that expansion, it's kind of like, well, how much thought have you really put into this? So anyway, that's just a little anecdotal from the grant funder side.
So this is, I think we talked about this, what are funders or donors looking for, what level of detail to provide, in a grant application or in a conversation. So once again, I go to the summary financial statements. Someone like Phyllis needs to see the picture and understand the financial position of the organization. Do not give someone a detailed QuickBooks statement. Summarize it so it's very easy for someone to say, oh, $2 million in revenue, $1.8 million in expenses, they're plus 200. They should be able to see that right away. I think the second thing is basically give the funder what they request in the application. There are times when people don't want to answer questions, but then they want to answer things that aren't on the questions. So if someone's asking you 10 things, you've got to answer 10 things, whatever those are. Someone asked me, well, should I just, 2020 was really dramatic, what should I do? And I'll give you examples. So someone I'm involved with at the board level initially, this is a month or so ago, they were going to lose 100,000 for 2020. And their initial budget for 2021 is they were going to lose 300,000. So they said, what should I send to the funders? What should I send to these? And I basically said is, wait a second, 2020, part of your business blew up and you salvage it by losing only 100. Now you're saying in 2021, when there's more stability, you're going to be 3 times worse. Just the visual of that just doesn't make sense. I mean, it makes sense that they went and they revised the budget and they did some other things, all good stuff. But there may be a time when if your budget is dramatic enough from the actual, and Phyllis, I want you to comment on this. If your budget you're submitting, if you had to submit, a lot of times, very standard, submit your annual budget. But if your annual budget is dramatically different from your prior year's results, you may want to add an addendum that compares the two and has some notes that explain what the differences were. They could be positive, they could be negative. Because once again, at some point in time, someone like Phyllis is gonna, pull one piece and another piece, and basically, I gave an example to someone, they lost 200,000 in 2020, and now they're gonna make 200,000 more, they're gonna be plus 200,000. So the bottom line has a swing of 400,000, and there weren't dramatic changes. I said, if I just looked at it, I would probably stop looking at it and email that person about what was so dramatic that can change the bottom line that much. Once again, we're repeating stuff I talked about. Budgets need to be realistic and achievable. Is your project scope and deliverables well defined? Depending on the business, because I worked in some larger USAID businesses where you already had to identify key staff or outside contractors. You may want to be already talking to them about being on board or identifying them in a contract proposal. And then once again, are your deliverable dates achievable? I think sometimes people get a little bit too aggressive on the dates and don't realize all the pieces that have to go in place. So that's just some items. And I guess Phyllis, on my side, when I look at, and this is when I look at anyone that I'm working with, whether it's pro bono or a prospect, is, I'm looking at the audited statements, I'm looking at their income statement, what's happening in the unrestricted column, and are they profitable? I'm looking at the balance sheet, cash, AR, AP, working capital. If they have investment accounts, what are the changes? I'm looking at any year-to-year big variances on the balance sheet. I'm also looking in the audited financial statement about any accounting, in the notes for the financial statement, any accounting treatment of a transaction requires a special note. There are some things that may occur. Once again, at times we have a current customer that had 2 businesses that were consolidated, and it's happened a couple times. So one business sold the other business some of the assets. And listen, it was a transaction that was reviewed by lawyers and everything else. But it was a special note that probably was half a page in the notes that explained what it really meant. So once again, if something is happening in your organization and there's a note, it's just something that alerts me to, gee, I may need to understand this in a different way. I'm looking at functional expenses, ratio of G&A to total expenses, just as a benchmark. I'm kind of non-judgmental about it. I don't have this, it has to be 10%, but it should be, realistic. And then if I go to the 990, I'm looking at some different things. I mean, part 7 has the compensation of key staff. And, I've been at this for now, I guess, 23, 24 years, and career 40 years. So, I can benchmark different staff. So if I'm going to the compensation of key staff and I'm seeing a lot of high wage earners, and maybe then I compare that to the revenue size of the organization, I might be concerned that it is too heavy weighted at the top, and it's just a challenge. So I look at that. And then there's some more details that are more explicit than the audit. Part 8, the statement of revenue, has more detail. Part 9, the statement of functional expenses, has more detail. Once again, I may go looking for something, maybe it's the amount of benefits they're paying. It could be a bunch of different things, but I think I am a regular GuideStar user. In fact, there's probably no company I talk to unless I look at their GuideStar and understand one of their prior 990s. I'll go to their website and see if they have an audit or a summary report. So I want to close with one item. Phyllis sent out a note about with our financial fitness test. So you could self-identify your organization. And we had 8 people take it, and it's a good enough sample. So we got some very strong results. And this is really good this is the average of these organizations. The question 14, you have someone with a strong financial background that you can bounce ideas off. That is so critical if you don't have that internally or on the board. So that is a huge plus. And then the second one, which is just as important, you're confident in the financial decisions that your team makes on a daily basis. Once again, very important. If you have your team making all sorts of decisions that you don't trust or you don't have confidence in, that's a challenge. I think the areas that I'm just picking ones that I see are challenging is there are a lot of you that probably don't have the right accounting staff with the right skill sets. And I will probably tell you, if you're under, 2 or 3 million in size, that's probably true. And the last one, which got the worst results, is your financial system is not set up to measure results. I mean, QuickBooks is a fantastic product. I've been using it since 1998. But it's not measuring impact. It's not measuring, it's basically you're tracking revenue and expense transactions, doing a class analysis, but it's not measuring the results that you may need internally for grants, for impact reporting, things like that. So, no, it's good. No, we've used this for a long time, and I think it's good. It's always good to self-identify, what's working and what's not working. So does any more questions from anyone? I think Heidi has a question.
I'm sorry. Yeah. Hi, this is Heidi. I can't figure out the raise hand or anything mute. What kicks off, in your opinion, a larger audit versus an annual financial review?
Well, sometimes the audits, are required by, a foundation funder, something. Someone requires an audit. I'm the board chair of the Stockbridge Library. Our revenue is about $470,000. We're on this modified cash basis, which I don't like, but it is what it is. We're just doing a review, and there's no funder need for an audit. There's no estate requirement for an audit. I mean, if we were over 500,000 in revenue, we'd be required to have an audit. I think I look first to, the question is, are you required to have an audit? Number one. The second question, and once again, the review is just not as detailed. Are there issues in your organization that would require an audit? A more thorough deep dive into the numbers. And I was the VP Finance at Kapalo Center for Yoga and Health, 37 million in size. It's about 1.5 miles up the street. And every year we had an audit, we also suggested to the auditor that they look into one specific area of the accounting function to make sure that there were no concerns. So one year we changed from paychecks to ADP, and they reviewed the whole payroll cycle and commented on it as part of the audit. I think audits and the price of audits, it's very tough to get it under 10,000 anymore, at least on the East Coast. And then you have to say to yourself, gee, if I got a review for 7,000 instead of spending 15,000 on an audit or 12,000 on an audit, I think you have to ask yourself, what is the audit going to give you that the review doesn't? But part of just doing a review means that you either internally or on your board have to have someone with financial expertise, because you're giving up that level of scrutiny if you don't have an audit. Does that answer the question? Yep.
Yes, yeah, it does. Thank you.
John, we did have a question about a restricted fund, and it says we have a restricted fund that will set up an endowment for a property we support. Our accountant is asking for a policy that he can put in the footnotes of our financial review. What should be in that policy?
Well, there should be you could just have a very few paragraphs about a policy about this restricted fund. The funds used are for this intended purpose only, et cetera, et cetera. The use of the funds has to be approved by, could be the board executive committee. I think you could, probably create a paragraph that would, once again, you have already established, if I hear the question right, you've already established a restricted fund that's to be used for an intended purpose. So all you're doing now is really just papering up the explanation. But I don't view it as I view it as the times when we have to do that all the time. We have to write a statement, and listen, it's, good internal controls to develop a policy statement, so there's no confusion about how an intended fund or a set of funds are to be used, because when those are board approved, they become really the gospel of the organization. So it's good to, memorialize those and put them into a policy.
Okay.
Any more questions?
How can you measure impact if you are using QuickBooks? Any outside strategies?
Would that be hiring Suzanne Smith?
Possibly.
Yeah. I think I'd have to think about that. There, as I said, there are some higher level products that sit on top of QuickBooks.
Yeah.
That will let you create different reports. I think I'd have to find out more about what you need, but I think you would probably have to think about, what are those key metrics that you need to report on? Are they all in QuickBooks? Are there other, unit measures or other measures of activity that aren't in QuickBooks that you have to put in a report? I need to have more specifics.
John, if I could just say, I think one of the samples that I sent, and we're going to be sending in follow-up, talks about a way to do a report for your board on your financials. And so we're going to give you some samples, but that also could be something that you talk to John about in kind of his follow-up session, is taking a look at your existing financial reports and seeing what else does the board need.
Thanks, Suzanne.
Yeah. So that is a picture of the Charles River in Cambridge, Mass. And I have no idea why they named it Charles River CFO. all sorts of songs about the Charles River, so I don't know how good that is, but that's the, there is actually the Charles River, and it did flow by the office. The office just moved to Wellesley, but just talks about, everything we do is flexible. We add staff, we go up and down, nothing is fixed. And I guess that's the beauty about our approach, is that we can change things, multiple industries. We have a tax practice, we have an HR practice. And you have my contact information, but I want to just go to the last slide, is that I'm offering pro bono advice to any of the webinar attendees, and you'll see a bunch of items: financial contingency plans, financial reporting, dashboards. That PowerPoint, there are a lot of concepts to absorb and figure out how you execute it in your organization. I do this all the time, so for me, it's just, I like doing it. I get kind of buzzed by it, kind of, challenge question. But I encourage you, to email me. Maybe there's a more detailed question that we need to have a call or a Zoom call. I'm more than happy to do that. My goal in life is I want you to have better information so you can create financial sustainability for your organization. So if I can clarify some items for you, I'm more than happy to do that.
Thank you, John. That's huge. I hope people will reach out to you with very specific questions that they might have. I think that's just incredibly generous of you. So thank you for that.
Yeah, and there are times, as I said, I've done 12 pro bono assignments. It was, hey, we need to find a new audit firm, so I revised an audit RFP and reached out to some people. Someone had done a grants budget. They were doing a grants budget, and it did not hold together. Phyllis, this would have been, DOA. This thing was just, it didn't make sense. It wasn't linked. You couldn't change it. So and it was 2 organizations under umbrella. So we did it. We calculated what they just picked overhead out of the air, which was another thing I couldn't understand. No, but we developed an overhead rate, and they got funded. They had a good budget to get funded. So there have been there are a bunch of things I call them sometimes small tweaks to what you're doing that can create great success. So don't hesitate to reach out, because I think a little knowledge can go a long way.
Absolutely.
And it looks like Heidi has her hand raised. Heidi, did you have a question?
And I think she was giving me a high five after the last answer.
All right, high five. All right.
That's it. We got to just, the high five has to be tilted or something. I don't know.
Okay. Thank
Good.
you so much, John.
I really enjoy doing this. So no, thank you, Phyllis. And I know we've had lots of conversations and emails, and I appreciate you and Suzanne encouraging me and guiding me to create a better presentation. So thank you very much.
No, I think this was spot on. And if nothing else, we learned that if you put the time in on the front end to build the kind of reports you need, then you can quickly access them and update them, and and get some efficiency going in answering your questions from your board or from funders or whatever, and have the confidence in them, and not be starting from scratch every time. So I know it does take a lot of upfront time to do that kind of thing, but I think it will help you sleep better at night to know that you've got solid statements and backup statements and dashboards and all of that. So thank you so much, John.
Yeah, it helps too, because once again, I've seen it, I've been involved with it. This is like any sporting event. When you're in the last 5 minutes, last 2 minutes, that is not the time to revise strategy. That's the time to pull out your plan and be able to explain it. So
Yep.
all this work up front pays a lot of dividends, because then, you know, Phyllis calls you up and quizzes you, you got the answers. That's basically the whole purpose of this presentation today, is to become Phyllis proof. No, it's important to, no, listen, it's important.
And committee proof, not just me.
Yeah, no, it's important to be prepared, have the answers. That monthly review of the financial statements, I would just tell you, is so important. Every time I look at someone's financial statements, I always have a ton of questions, but I have questions about, wait a second, why did you include the whole cost of the investment manager for the year in 1 month? I don't know why they did it, but it's just important to do that homework, put the time in. So.
Yeah, absolutely. Okay. Real quickly, I think we're going to flip back to Tamia's going to put a couple of slides up for us just for some reminders.
Yep.
Okay, so 3 down, 2 to go. Next week will be marketing. The week after that is governance, and would really love for you to bring a board member along to that last one. Stacy will be joining Suzanne for that session. So we're looking forward to both of those. You'll hear more about marketing next week. We'll send a reminder email out about that. There's the link to register if you haven't already done so. And then the next slide, I think we might have mentioned this before, but if not, if this is news to you, we'd love for this group to be part of a bigger solution that John and Suzanne and some other nonprofit professionals are working on. There is a survey for nonprofit leaders that needs to be completed by February 7th. This is nationwide. And then the follow-up to that will be this workshop on trends for, action items and trends for the year ahead on February 24th, that Suzanne and John and others will be part of a panel. So for those of you who want to take this to the next step and sort of, re-emphasize some of the things you're learning here on a local level, we encourage you to please, complete that survey and be part of those results. But then also, if you want to register for this Rethinking series on February 24th, just an hour and a half, we encourage you to do that as well and bring back any learnings you get from that to this area. So
Great. No,
anything you want to add on that, John, about the survey or the workshop?
The good part about the survey is for each one of those items, finance, innovation, fundraising, marketing, and then there's also a digital strategy. You get to pick, 3 out of 10 possible items that would be your top priorities.
Okay.
And the list for each one of these is very comprehensive. So really, it's helping you self-identify what's important, and then you're going to see what a summary of all your peers think is important for each one of those areas. And then there's things about, you're going to be hiring, is your revenue growing? There's a bunch of other questions, but really once again, I always think anytime you can self-identify what's important to your organization, why, it's a really good thing. And that survey does a good part of that.
Yeah, and after 2020, I think we're all kind of in reset mode. So for most organizations, it is a good time to just really put a lot of focus on these things where otherwise you might not have in the past. It just sort of came and went as quarters go, or the new fiscal year started or whatever. But I think we've all seen the importance of this type of assessment. So anyway, hopefully, just coalescing all of those thoughts and making you concentrate on it for a little while will be helpful. Heidi, I think your hand's up. So did you have a question?
No, that was from like a half hour
Was it
ago. And my answer was, it was questions. So thanks.
Okay,
Phyllis.
we'll take it as a high five then. Okay. Anything else? Any other questions? Again, John is available if you do have additional questions for him or want to run anything by him or talk about some of those QuickBook reports or whatever. He has graciously allowed for that. So just I think we put his email in the slides and in the chat maybe. So does everyone have it that wants it? Before we
first initial, last name, it's phylliscfo.com.
I just put it in the chat, everyone.
Okay,
And Phyllis, there are some additional, I'm going to be sending you that reference book title about dashboards. I'm
great.
going to send you some information about, what funders are looking for in terms of applications and financial review. So there are some other documents I'm going to send you that you could share with the group.
Okay, thank you. Okay. Anything else before we sign off for today? Thank you, everyone, for attending. We really, really do appreciate.
Right.
No, we're not doing this for nothing. So
No, my pleasure. I'm glad to help out. Very
Yeah.
good.
thank you, John, all the way from the East Coast. Thank you.
That's it.
Spanning the continent here. Thanks.
That's right. Very good.
Okay.
Thanks
All
again.
right.
Thank you,
Thanks,
everyone.
everyone.